Welcome to Learn Commerce PU online classes. Don't forget to like our video and subscribe our YouTube channel for all the updates.
Hello students, welcome to second PUC Accountancy online classes. In our previous class we have solved the problem, this is problem number 3. Today let me take up problem number 4. I'll read out the problem and let us analyze and we'll solve the problem. Ramya, Kavya and Divya are partners. Page number it is 69. Question bank, page number 69, problem number 4. Okay. Ramya, Kavya and Divya are partners sharing profits and losses in the ratio of 1:2:1. See, 1:2:1 means 1 plus 2 plus 1. So it will be 4, denominator will be 4, 1 by 4, 2 by 4 and 1 by 4. This is the ratio. The balance sheet was as follows given 31st March 2018, right? Now let us make a bifurcation which is outside liability and which is internal liability, right? Creditors outside liability, transfer it to realization account. Bills payable, transfer, because outside liability. Bank overdraft means bank loan, temporary loan given to the business people, isn't it? On the, that is a balance standing to the creditor on the basis of the transactions they made with the banker in their current account. And this facility will be given only to the current account holders, and current account will be given only to the business people, isn't it, businessman. So it is outside liability, transfer it. Reserve fund we already dealt with in the previous problem, transfer it to partners capital accounts, correct, capital accounts. Then Vani's loan, whether Vani is a partner? No, Vani is not a partner, she is an outsider, so it is outside liability, transfer it to realization account. Then capitals, no doubt internal liability, that is the capital balances, you will have to start with this balance in the capital account, right, by balance brought down. Then cash, no, it itself is the most liquid asset, cannot be sold in the market, so don't transfer. Debtors, stock, furniture, machinery, buildings, all are assets, current and fixed, transfer it to realization account, isn't it? On the above date, they decided to dissolve the firm. Yes, assets realized as follows: debtors 13,500, stock, buildings, amount is given. Vehicle which was unrecorded also realized for rupees 4,000. Unrecorded vehicle, unrecorded asset. Vehicle is an asset. So unrecorded means you have to include it under what? Under, that is while selling the asset you have to include this also. But while transferring at the beginning, don't enter this because it is not there in the balance sheet. It is unrecorded. But while selling the asset, sell it with other assets and record there itself. Then machinery realized at book value. The book value means the balance sheet value, right? Yes, that's all. Furniture was taken over by Ramya at a valuation of rupees 9,000. Asset taken over by a partner. Ramya took over furniture means Ramya's capital account added to realization account. So on the credit side by Ramya's capital account. If asset is sold on the credit side by bank, asset realized. If asset is taken over on the credit side, isn't it, by concerned partner's capital account. If liability is paid to bank on the debit side, liability is paid off. If liability is taken over by partner to partner, concerned partner's capital account, liability taken over. Very simple, see, isn't it? Then creditors was settled at 10% less. That means while making payment to creditors, you have to deduct 10% from the creditors and remaining amount should be paid, not 10% should be paid. There are students, if creditors are 10,000 and 10% less means they will calculate 10%, it will come to 1,000 and they will make payment of 1,000. Actually what you have to do, 10,000 minus 1,000 and the net amount should be paid, that is 9,000 should be paid. Remember, don't get confused. Divya took over Vani's loan, liability taken over, very simple. Vani's loan is a liability taken over by a partner. So, what you have to do is, what we will do? Realization account related to concerned partner's capital account, right? Yes. It should be credited to partner's capital account. That's all. And then interest on bank overdraft due rupees 400 was also paid off. So while making payment to bank overdraft, give 400 rupees as outstanding interest on bank overdraft. That's all. Realization expense amounted to rupees 4,000. Only one entry to bank account. It's in this case it is cash. Cash at bank is not there, cash is there. So to cash account, realization expenses paid, right? So let us solve the problem. Realization account, draw the columns, provide for JF column also. Particulars, JF, amount in rupees on either side. Debit credit is a must because it is an account, correct? Let us start, draw the columns quick, do it fast. To debtors account, I will transfer each one of the assets to debtors account. Is there any PDD? No, only gross and net debtors given, right? There is no gross and net as such. The debtors, only one value is given. There is no PDD. So debtors account 15,000. Then stock account, write the amount. See the balance sheet value only 18,000. Furniture account 12,000. Machinery account 20,000. Machinery account 20,000. Buildings account 60,000. Buildings account 60,000. That's all. Know the receipts. Let us move on to the liabilities, isn't it? By creditors account, how much? 20,000. Bills payable account, how much? 6,000. Bank overdraft, how much? 4,000. Then Vani's loan account, 5,000. That's all. Now let us move on to sell the asset. Proceed to sell the assets. When we sell the assets, cash comes in. So by cash account, there is no cash at bank, only cash in hand is there. So cash account. Assets realized, right within brackets. Assets realized. Now let's refer adjustment and see at what price the assets being sold. Debtors, it is given in the problem. Debtors were sold at rupees 13,500, inner column 13,500. Then stock 19,800. Buildings 62,000. Vehicle 4,000. 4,000. Then what? Machinery 20,000. 20,000. That's all. 1,19,300. 1,19,300, right? Yes. Then what? Next one is furniture taken over, right? Asset taken over by the partner. So by Ramya's capital account. By Ramya's capital account. Capital account, right there, furniture taken over. Furniture taken over. Yes, that is 9,000. 9,000. Refer the problem in the adjustment part. That's all. Then we have to make payment to liabilities, to cash account, liabilities paid off, liabilities paid off. Yes. Then under that, first one we made payment to creditors. How much? 10% less, 20,000 minus 10%, right? That will be 18,000. 18,000. Bills payable. Let us write it within inverted column. That's a inner column. I'm sorry. Inner column. 18,000. Then write one by one other assets. Bills payable. Bills payable. 6,000. 6,000. Bank overdraft 4,000. Bank overdraft 4,000. Then interest on bank overdraft. That's outstanding interest, right? Outstanding interest is 400. Refer adjustment. Right, outstanding interest. Yes. So 28,400 is the total payment of liabilities. Then Divya took over Vani's loan. So Divya's capital account. Divya's capital account. Vani's loan taken over. Loan taken over. Write the amount, how much it is? 5,000, right? Yes. There is expenses of dissolution. So to cash account, realization account letter to cash account is journal entry. Expenses, how much it is? 4,000. Write it. Now see the total, which side is greater. Write the total and find which side total is greater. It comes to how much? 163,300. Am I correct? 163,300. Leave gap and write the amount. 163,300. Now find out the difference. There is a difference of I think it is 900. Yes, it is 900. Distribute it among the partners to all partners capital account. All partners capital accounts. Under that, write one by one. Ramya, Kavya and Divya, right? Ramya, Kavya and Divya. Write in full. Ratio 1 by 4, 900 into 1 by 4, 900 into 2 by 4 and 900 into again 1 by 4 is equal to 225, 450 and 225. That's all. Right here within bracket, profit on realization. Profit on realization balancing figure. Realization balancing figure. Balancing figure. That's all. Your realization account is done. Let us move on to the next step, that is capital accounts of partners, right? Combined capital accounts. Combined capital accounts of partners. You have to provide 3 columns each on either side. There are 3 partners. Draw the columns. Yes, Ramya, Kavya and Divya. Rupees, write in full. Write debit, credit. Start with the capital balance, that is by balance brought down. By balance brought down. How much? 42, 35 and 20. and 20. Then there is a reserve fund, right, in the balance sheet. Share it among the partners in their ratio. Only one ratio is there. Reserve fund 1:2, 2:1. How much? 2, 4 and 2. 2,000, 4,000 and 2,000. Then refer realization account debtor to all partners capital account. So all partners capital account is credited by realization account. Realization account, right here, profit, isn't it? 225, 450 and again 225. Anything else? Liabilities taken over by one of the partners. Realization account debtor to partners capital account. Divya's capital account, one is loan taken over, right? So Divya's capital account is credited by realization account. Realization account. Liability taken over. You can write Divya's loan taken over. If you write, it's not wrong. Liability taken over, it is better. Correct? In Divya's column only 5,000. Then what? Then asset taken over by one of the partners. Furniture taken over by Ramya. So Ramya's capital account debtor to realization is the journal entry. Ramya's capital account debtor to realization account. Furniture taken over. Or you can write asset taken over. Asset taken over. Write in Ramya's column only. How much it is? 9,000, right? It's 9,000. That's all. no other entries, close the accounts and find out the difference, make final payment. See which side is greater, always credit side will be greater because so resolution 44 to 25. Write the same total on the other side, 44 to 25 in Ramya's column. Kavya 39,450. Kavya and Divya, it is 27 to 25. Correct? Yes. So difference is 35 to 25. The other two partners same amount for 39,450 because there are no debit entries. 39,450 and 27 to 25. Right here to cash because all entries are cash only, no bank interest. So cash account, final payment made, balancing figure. Done. Don't bring down this balance. It is not balance at all. Balancing figure which is settled, right? Final settlement or final payment. So amount is already paid, firm is closed. So no question of bringing down the balance. Don't do the mistake in board exam. Let us move on to the last part, cash account. Cash account. Yes. Write the balance first. Debit balance always, debit credit, particulars, amount in rupees. Write column headings. To balance brought down. How much? 15,000. Realization account. To realization account. Assets realized. How much? 1,19,300. Write the single amount. No need to write breakup here. Then refer where are cash entries. There is a cash entry here. Realization account related to cash account. So cash account is credited by realization account. Students have the habit of writing cash account here again. Is there any journal entry you have seen cash account related to cash account? No. So this question of common sense, isn't it? But students, they write in cash account, they will write cash account. In bank account, they will write bank account. A funny thing. By realization account, liabilities paid. Write the total amount. How much? 28,400. Right? 28,400. Then what else? There is one more cash. Realization account to cash account expenses or realization 4,000, right? So by realization account within bracket expenses, isn't it? 4,000. That's all. Then final balances, capital balances, capital account related to cash account. So by Ramya's capital account, final payment by Kavya's capital account, final payment, and by Divya's capital account. Divya's capital account, final payment. Write the final balances in their capital accounts, 35 to 25, then 39,450. Refer capital account final balances, and 27 to 25. Now if you check the total, it agrees. No balance in cash account. Correct? What's the total? 134,300. 134,300. This problem is also solved. Ramya, Kavya and Divya, right? Yes. So, very easy problem. New things are not there, only interest on bank overdraft outstanding, isn't it? So, I took this problem to solve in the class. Now, take down your assignment problem. Assignment problem. Problem number 5, page number 70. Problem number 5, page number 70 of your question bank. Shruti, Shilpa and Shreya were partners in a firm. Solve that problem. Very easy. No new things here. So, no need to explain also. Just go through and solve the problem and submit the assignment on time. Thank you for watching this video. Thank you.